All right, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into the markets here. So, mostly sideways week here. It was options X for the month of February. And it is typical to see some type of chop, which we did see pretty much all week long here. Bottom line, though, the markets did try to break out a little bit there on the spiders there. You can see on Wednesday and really Tuesday, but got pushed back in. And I think the Qs are a little bit more telling. We're actually going to focus a little bit more on the NASDAQ in this video here. But you can see here on Wednesday, we tried to break above this trend line here, and we got pushed back down Thursday into Friday here. Some things that definitely changed here, and we'll go back over the spiders here. We're definitely seeing buy the dip come back. And we're seeing some, what I would call, obviously this move is a short squeeze, but we're seeing almost panic buying here as well. And that is also something I've been hearing from a lot of other people, a lot of other fund managers in kind of my circle, my contact list, that we're seeing funds that were scared, that they're basically scared to miss out on the next bull market. They missed out, they were too scared to buy in 2020 and they missed that whole run. And now they think that, okay, we're going back up. You can see here in the mornings, this is just this week here, 9:30 in the morning, we gap down, huge dip buy in the afternoon, gap down, dip buy, gap down, dip buy, gap down, and then kind of a little bit of a micro dip buy, but Friday was options X. So that throws a little bit of a wrench into things. But either way, we're seeing kind of that panic frenzy here. If you ask me, we're also getting close, and this is kind of a sign here that we're getting kind of closer to the end of this bear market rally. Let's take a look here at retail inflows. This is always a good tool. Let's get over there. So take a look. Retail inflows surging this year. There's December, and here's the new year kind of rolling over. And you can see that we're higher now than we were all last year. And we just like clipped that entire, really the outflows that went all the way down last year. And now they want to, all the retail money wants to buy now that we've, had this move off the lows where they were too scared to buy back here. They were too scared to buy back here, but now everybody wants it up here. And, that does signal some distribution to me. Another thing, we're going to talk about this. I talked about this to my members last week. And we've talked about it on here before, but everybody's talking about, was talking about the all-time high trend line here. Obviously that pushed above that. And you guys know that before this even broke out, I said, guys, just because we break a trend line, I was saying this back here in the early January. So just because we break a trend line doesn't mean the bear market's over. And I want to show you again, going back to 2001. This is actually strangely similar here, cyclically. So if you take a look at this pattern here in 2001, we had a trend line that, went on for actually a little bit more than a year. We bottomed down here and then we, kind of rolled over a little bit and then we broke through it. And after that was the biggest leg down. Now, I'm going to show you this here because I think it's very strikingly similar. So let's pull this up here. So this is 2001, and I'm just kind of zoomed in a little bit, but we had a bottom in late September, and then we came up here, we chopped around for a bit, we chopped around sideways. Does this look familiar to you at all? Failed breakout attempt in December, that big green bar, and then 1, 2, 3, 4, 5, 6 rollover. We found support there. We had a second failed breakout with a slight higher high. Then we came down, we put in a bear base, we blew up. And then we had a failed bull flag, and then we rolled over, and that started that next leg down. So that looks definitely very familiar here. And this is where we are now. October bottom, up move, we chopped around, failed breakout attempt, big green bar, couple of red consecutive bars down, second failed breakout attempt with a slight higher high. It was by just pennies, but it was a higher high. Failed bear base. Right, we tried to put in a bear flag. We said to buy this bear flag, and we rallied up, bull flag. So very interesting. And again, this is going up here. So this is that all-time high trend line too, and you can see the same thing there in the 2001 correlation. Now again, does this mean it plays out exactly like that? It doesn't have to, but it is very similar, and just want to show you guys that, yeah, once again, just because you break a technical level doesn't mean that the bear market's over. It doesn't mean that you have to panic buy, which is what we're seeing. And let me ask you too, another thing, I'm going to focus on the NASDAQ here. Did we build any supports on this run up? So let's just get rid of these lines. Did we build any support there? Did we build any support here? Did we build any support here? No, we didn't. So we can go down as quickly as we went up. You need to build support. Bulls need to build support in order to create a sustained rally. As these levels will get back checked, and they will, you can break through them very easily. Now, of course, there'll be a level here around 295, 297. Just as back here, you had this little kind of micro level. If we go back, right here, you can see, yeah, we had a little bit of a level there. So that stalled us out. And then back here, obviously, there was a level there. And, we had to bounce first to get through that. And again, there's a tiny little micro level here, and then a little bit better one at 295. But if we break below 295, there's not much supporting us here. These moving averages might give you a bounce. But again, this is just totally characteristic of a bear market there. All right, anyways, let's get over to we talked about the spiders and I'll just give you the levels here. So again, we're still looking for about, 402.35 is this green bar low. That's daily chart support. A break of 400 takes you to 395 pretty quickly on the spiders. Again, I can't rule out though, just to be clear. So it doesn't mean just because these correlations are in place that they have to play out. We could still have one more pop. We do have that gap fill up there. We talked about that last week. I think that would be probably your max move for right now for the market. So just to be clear on that, but we'd have to get back above this channel here. And again, to use the Qs as an example one more time, we've already been rejected at this upper trend line a couple of times here. So we had a really good chance to break out Wednesday. There was no follow through Thursday. We came back in. We still held the 20 moving average, but if we do push up, again, there is this big red bar high up here at 321.51, and then there's a gap just above that. So those could be possibly your logical upside targets for the Qs if we do get up there. And then, of course, the spiders, we're looking for that gap fill at 422 and change. Russell 2000 here, I think this one has already topped. We had a parabolic move. We went straight up 1, 2, 3 at the end of an already overbought move into a lot of resistance. If we do make a new high, it'll be very, very minor. Again, there's a gap at 201, so that's not much higher than this pivot here. But that's if we even push up. But either way, Russell 2000 again, found support at this 188 level like we said it would, and it's basically just riding that 20 moving average, still inside of this red bar though, so at 195.12. So Russell, those are the levels there, but I do think this one has put in its top. The Dow here again, same thing. We're still looking for around 345, maybe 345 and change. We do have higher lows, so it's possible we can push through that. And this pattern's not terrible, but there's still a lot of resistance. Weekly chart resistance at that red bar high there. A lot of supply trapped in that area on the diamond. All right, over to the SMH. So we do have NVIDIA earnings. This is another chart that's very top heavy. Again, did we build support? Answer is no. Just straight up. This is a short squeeze. This is how it works. We went up right into a 50% fib retrace as well. So right into that area here, and we stalled out there 2 candles in a row. If you get a third candle, this is a third tail candle, excuse me. This is probably about done. They do have earnings Wednesday, so I can't say that it can't gap up or can't say that it can't gap down either. I never pretend to know what a stock is going to do into earnings. But for right now, you're holding that 20 moving average there. As far as the actual SMH, again, nothing technically wrong with the picture here. Still inside of this green bar, up move, it's holding up okay. If this does push higher, you're looking at a Pierce of 260, maybe 262, and that's about it there on the SMH. Then I think this will be a rollover target, just like everything else. IGV also holding up okay. Nothing terrible there. Again, same thing. Inside of this green bar here on the daily, there is a gap at 303.07. So if we do push up, that's what we're looking for. If we lose 280, then things get dicey pretty quickly on the IGV, but it's hanging in there for now, so we'll just respect it. Dow Transports, again, pattern still okay. We held the 15,000 area. 15.5 would be resistance here on the upside. Maybe you can get back to 15.6 again. But again, transports, a lot of supply up in this area as well. A ton of supply here. So again, just be aware of that. Transports are hanging in there okay for now though, so we'll give it the benefit of the doubt. Another thing, let's get over here to, let's go back to Qs really quick. And I want to show you, because we're going to talk about interest rates. But let's put on the TLT. So one more thing here. I showed this on my channel earlier this week, but QQQ and TLT have to be correlated. And you can see here, every time that changes, the jaws have to snap shut. So here's the Qs, we move down, TLT moving down, everything looks all right. Qs get a big short squeeze. TLT starts going down and continues going down. The Qs, the jaws have to close shut. They have to catch up. Again, here, TLT starts to bid up a little bit. That signals that, the stock market's probably going to bottom. That happens. Qs continue to squeeze. What happens with TLT? It goes down. Right around here, the jaws have to close shut. What are we seeing now? TLT rolling over. That's 1, 2, 3 lower highs now. And the Qs have pushed up and made higher highs. This has to catch up. So I know there's a lot of people saying, oh, the bull case, the market lows are in. The bond market's not saying that. And the bond market is much, much smarter than the stock market. Remember, the bond market, that's not full of all the retail money. That's full of big money, institutional money. Anyways, so interest rates continuing to get pounded. So here's the 2-year. I'm doing this video on Mondays. You can see we do have that new candle there. Stock market is obviously closed today. But continuing to make new lows here, and we're bear flagging on the ZT. That is the 2-year Treasury note. This is a major problem for the Fed. Here's the yield up at basically 4.6% right now. This is actually just above the Fed funds rate. So now the Fed is back behind the curve yet again. So again, everybody knew this was going to happen, right? They left rates too low for too long. Everybody knew that was the case, and now they're paying for it. Now we're paying for it because they're behind the curve yet again. And if this continues higher, markets are going to have to reprice it. I mean, it's as simple as that here. But 2-year, basically in free fall here. The 10-year getting a little bit of support at this green bar. You got the pivots there, so it's getting a bounce down here on Monday. And ZB, again, finding some support at this pivot. I do think it gets a little bit of a bid here over the next couple of days here, but I'm looking at a possible M and then a possible A, so an MA reversal. So we'll watch for that here. But if bonds continue to sell off, there is no way stocks can hold up for much longer. And if they start selling off sharply, you might see panic. So anyways, interest rates getting hit here. Let's get over to, let's do a home builder. So XHB, again, same thing here. ITB, same thing. We're basically just hovering right around that 20 moving average. It's holding up okay. I think these have topped out like the Russell 2000. Maybe they could make one more little last gas push, but these look very tired. Another sector looks very tired. XLY, consumer discretionary. And again, same thing here. Did we build supports? Did we build support? Did we build support? No. So consumer discretionary getting very extended as well. Again, you're holding the 200 moving average here. You have a lower high in place. This is very top heavy, ton of resistance up here in this area here. So again, very overbought, very top heavy. Over to VNQ though. Again, now we have daily chart lower highs and lower lows. So this is a weak sector. Real estate is under pressure here. And we are expecting lower prices in 2023. XLF hanging in there okay. So we do have this big rising wedge. And they've defended that a couple of times now, so it did get saved here on Friday. We did manage to close green by 1 penny exactly on the XLF. But again, tightening here. So we're getting tighter on this pattern here. And they've been saving this green bar low at 36.35. So you can see right there. They've saved that by the close each of the last 4 times we've tested it. But we're now, you got lower highs here. The momentum is declining. Once this pattern breaks, XLF is going a lot lower. Take a look at, by the way, Credit Suisse. Another dump last week, and then really just putting in a bearish inside bar, bear flag there on the day. Look at the volume there, just absolute hemorrhaging clients right now. Credit Suisse in a lot of trouble. But you're not hearing anything about that. Retail money just keeps buying, just keep buying up here. I'm sure everything's fine. So again, XLF here. Watch that rising wedge as we get tightening up in this range. And then this one is cooked as well. All right, let's get over here to energy. So let's look at crude first, as always. So crude is up 1% here today. It is Monday again. Nothing too crazy though. We did lose this green bar on Friday. I do not like that pattern. I was starting to turn a little bit, I wouldn't say bullish here, but like slightly less bearish on it with that pattern this week. But we blew that out on Friday. So again, the weekly still under pressure here as long as we're below 82.72. If you get above that on a weekly close, crude will move a lot higher very quickly. But for right now, it's still basing. Right now, it's still trying to put in a bear base. If you ask me for one more push lower, that will be a major buying opportunity though. But right now, it is under some pressure. So we'll just let it do its thing. And we'll get into it when the time's right. XLE here, that was down pretty sharply on Friday, down 3.5%. How much of that is Options X? It's hard to say. I mean, that's a pretty good dump there just for it to be Options X related. And on the weekly, again, we still can't get above this red bar high, so 91.56. We had an engulfing reversal this week, so maybe XLE finally into backing and filling mode, maybe into correction mode here. XOP, same thing, pretty good outside move last Friday, and we wiped out all that, basically like the last 2 weeks of trading in one candle. So XOP under a little bit of pressure here. OIH down 4.5% on Friday, holding that 50 moving average, but again, a pretty good outside move there. This still, as long as it stays above this green bar here, or 308.31, so that green bar low right there on a weekly close, I'll give this the upside bias at 350. If that breaks, you're probably going back to 280 though, so just be aware of that. But again, OIH energy is still holding it really well, with the exception of nat gas, which now I'm starting to see signs of panic here. And that little dump on Friday, that really it filled up my inbox for sure. What I can say is first of all, this is liquidations. So you're seeing a lot of artificial sell liquidity here from people who are over leveraged at the highs. It's possible there's also some political stuff going on here. NATO probably doesn't want Russia gaining an advantage in any sort of way here. So that's possible. Another thing though, is that seasonally, and I've showed you guys before, nat gas typically bottoms out in February and right around the middle of February at that. So let me pull up this one more time for you so you can see, again, it's a bottom right around in the middle of February here. You trade down, and then it's pretty much all the way up into June, into summertime. There's already talks about it. A lot of these, producers are already starting to cut output. So, and we're already looking at a hot summer as well. I know we had a very mild winter that probably didn't help. So inventories are a little backed up. But again, we're seeing mass panic here. And usually that's right around where the bottom starts to take place. Again, very much like at the highs when you see panic buying like we're seeing here. So anyways, nat gas, we'll see what it does this week. You did have a little bear flag. If you can negate that bear flag, this gets to 3 and then 350 very quickly. If this turns into a fake breakdown, you could see nat gas get its legs very fast. But anyways, let's get over here let's talk about uranium. CCJ still holding up really well, very strong chart. Again, if I say it about everything else, I got to say it about this, but you didn't really build supports. But take a look, though, on the monthly. This is still just a nice consolidation pattern here on the monthly. So, again, we talked about this. I said this a while ago when we first started to break out. I said, look, it needs to back and fill. It needs to go sideways, and that's what it's done. So it's continuing to do that, and you're above these pivots here. So CCJ still looks really good. Uranium looks good. Again, doesn't mean we can't have a correction. It is still backing and filling. You see the URNM there backing off a little bit this week. SRUF actually holding up much better, but uranium still in a strong uptrend, and it's holding up very well for now. If we were to get below, if you get below that 20 moving average, you're going to go test 27. If you get through 27, then it's right down to about 25.50. That's kind of your downside target. If it does push up, there's a lot of resistance still up in this 30, we'll call it 30.50 there on CCJ, but uranium's still holding up really well, so we'll respect that. All right, dollar index. Still showing signs of strength. I told you guys I like this here. And it went up into this red bar. We had to back off. This needs to do some backing and filling. But it will get a bid here probably in the next week or so if it can, consolidate a little bit more. But we had a nice move up, bull flag, and then a push this week. And it did pull back a little bit on Friday, but a little bit more backing and filling should get this to that 106, 106.50 area on the next kind of leg up there. Gold here. So gold finally getting a bounce. We talked about 1825 to 1830. That's exactly where we went. Got a nice tail candle off of that bounce. So again, gold may go up into the 1880, maybe 1900 handle here in the near term. I think it will probably retest that area. This is not my, this is a tradable gold level here, but there's better levels lower. So 1750, 1775 are going to be better for right now. But it did get a bounce off that level, so we respect it. GDX, I almost pulled the trigger here on a swing trade here on Friday. I'm kind of wishing I did here. Right into that necktie of the 200 and 100 moving average. You got these pivots right in that area, so that was a good area of support. This should get up to 30, maybe 30.75 over the next couple of days to weeks. And then I think there's probably one more push down. 26 is pretty good support though for GDX if it does get down there. Silver, same thing. Again, we went basically just close to that 200 moving average. You can see on the weekly, we did pierce the 200, weekly 200 and 50. And now we're getting a bounce off that again. 22.50 to 23 are your targets there. I have a better buy level on silver lower. We'll see if it gets there in the future. Platinum, still holding up here. So we had this falling wedge pattern I talked about on my channel. And, we tried to break down on, what was that, Wednesday? And then Thursday, Friday, we held it. And now we're getting a little bit of a bid. It's off the highs here. This is Monday. Wow, nice little rejection there. If this can put in a higher low, though, this can break that falling wedge, and it should get up to 980, possibly 1,000. So this is a tradable level here on platinum, but this has also one more leg down if you ask me, and then I will be buying it myself. Copper here, pretty decent outside move today so far. I think this probably wants to retrace to 425, and then I think copper is about done, at least for now. But yeah, nice little bid there off the lows. You did have a bear flag that you're starting to break out of. So you are above the moving averages here, but I do think that level right around 425 is good resistance. All right, so lastly, let's get on to Bitcoin really quick. Okay, so there we go. So Bitcoin, lots of volatility. So we had a big surge Wednesday, and then we reversed hard on Thursday, and then we came back up, and now this is holding up okay. So if Bitcoin, here's the thing, here's kind of the bull case in the near term for equities. If Bitcoin's still holding up, the stock market will probably hold up. That's generally, you're going to see, if you're seeing squeezing in Bitcoin, there's probably squeezing in other things to be done. Then there is probably a lot of retail buying here. They're hearing a lot of bullishness now on Bitcoin. Everybody's getting excited again. And again, for me, for the type of fall that we've had, at the level of excitement that we're seeing here, this is way too soon. That tells me that we have lower to go. Again, if we do push up in the near term, I could see 28,000 for sure. So you got this big area right here that goes back here, pivots, and then there's your breakdown area. So that could get back tested. That was never back tested. So that would be kind of your upside move there for Bitcoin. But it did finally get to that 25,000 target, which I talked about for weeks on here. We got to that, and right now it's holding up. If this breaks back down below, these pivots, then it's probably cooked. But for right now, as long as it bases here, this can still push up, this can still squeeze up. So we'll give Bitcoin an upside bias for now until proven otherwise. Ether, same thing, nice little pattern there, up move inside bar. So again, for that, you'd probably be looking at, let's say 1900. Maybe it can overshoot to 2000. I can't rule that out, but yeah, crypto's still holding up okay, and that's kind of definitely a point for the bulls here in the near term. And that's another reason why I think you could have one more pop here. So just be careful of that. But again, that correlation going to 2001, man, that's very, I mean, it's almost dead on there. So anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll talk to you guys all next week.